Joining me right now is BMO Capital Markets chief strategist Brian Belski. Also joining the conversation all morning long this morning is Dagan McDowell and Christian Whiten. Brian, thanks very much for joining the conversation. Good to see you this morning. Goldman Sachs is raising the odds of a taper announcement in November. The Fed will cut back purchases by $15 billion at each meeting, which is what Goldman's saying. But we had an interview with Robert Kaplan last week, and based on what he was saying, Brian, I was getting the feeling that he's going to come out soon and say, let's forget my October deadline in terms of beginning the taper. Let's push it to next year, given these weak signs that we're seeing in the economy. What's your take on all of this?
Good morning, Maria. I'm with you. Shocker. I think that the Fed remains the smartest person in the room, and I think there's been too much talk and too much fear of inflation. I think we're closer to disinflation, and I think the Fed's going to play defense, and I think that's why the market's rallying, and that's part of it. The second part of it is that earnings have been good. I think that this whole notion of volatility geopolitically, but also issues with China and investing there, I think it just points to why you can, will, and should continue to be invested in U.S. stocks. I think that's still the game. And so I think the Fed's going to play defense, and I think the market will rally into that. I do believe that the majority, that the majority of institutional investors that run mutual funds and run ETFs have massively underperformed, and we know that the hedge funds have really underperformed. And so that's why you continue to hear all this talk of a correction and tantrum and things like that. It's coming from people that miss the market rally. So again, we're heading into, as you know, we're heading into the more volatile period of the year. Wouldn't be surprised if we see more choppy trading, but there's more new highs ahead, Maria, over the next 12 to 18 months.
Here's the president of the Federal Reserve Bank of Dallas, Robert Kaplan, with me last week. Watch this, Brian.
But the thing that I'm going to be watching very carefully over the next month before the next meeting is it having a more material impact on slowing demand and slowing GDP growth. And so I'm going to keep an open mind on that. And if it is having a more negative effect, that might cause me to adjust my views somewhat from ones that I've stated.
So Brian, you're still bullish. You've been right on this market. You want to still buy stocks here. What's your take in terms of allocating capital if we do see the Federal Reserve push that taper out to 2023 or 2022, rather?
It's a great question, and thanks for mentioning allocation. I think allocation is going to be the key. And what we said heading into this year was, and it was kind of a controversial call, that you should be equal weight growth and value, and you should be equal weight small, mid, and large cap stocks, and use the ebbs and flows of the market for opportunity. What does that mean? Well, small caps have underperformed here the last couple of months after having this great move in the beginning of the year. I think that's an opportunity for those traders, but we think you should be equal weight across the board. I think technology for the next 3 to 5 years obviously is the best sector, along with communication services and discretionary. But I think financials between now and the next 6 to 12 months also are great places to be from a sectoral basis. But I think many investors have to understand that the stock market is a market of stocks, and you want to increase your fundamental bottoms-up stock picking. But more importantly, Maria, you want to own more concentrated positions. You don't want to own a portfolio of 200 stocks. I think you want to own a portfolio of 40 to 50 stocks and really make your bets and stick with your turnover to be low, because that's how you're going to beat a market like this.
And you've been particularly interested in small and mid caps right now. Do any of the headlines of the day work into your models at all? Does, for example, what's taking place in Afghanistan, does it matter to markets, Brian? What about all of the spending and tax discussions? We don't know if President Biden's plans, the economic agenda, is going to be able to get through now with this debacle in Afghanistan. But does that matter in terms of allocation, given that he'd like to see taxes go higher and to spending plans go through?
Well, hurry up and wait, right? I mean, the issue with taxes, you better hurry up and get this done, because you have midterm elections next year, and you still have an infrastructure bill to figure out how they're going to implement that, and you still have COVID to deal with. So I think actually status quo, and I think nothing's really from a political standpoint going to affect stocks, quite frankly. But I think it's still about the fundamental wherewithal of U.S. companies and earnings, and I think it's going to continue.
Yeah, it's a great point. Brian, it's good to see you this morning. Thanks very much. Come back soon.